All right. So we last left off on chapter 6. So now we're going to go ahead and continue with chapter 7. So again, chapter 7 is all about perpetual inventory. So again, chapter 5 and chapter 6 was dealing with periodic, right? We understand there's rules to periodic. Now, chapter 7 and chapter 8 is going to be strictly perpetual. You need to know the difference between the two and don't mess it up, because I will ask you a question and the multiple choice answer can be. You have to read carefully, right? I'm going to give you answers that are part perpetual and answers that are part periodic. Make sure you understand which one's the difference, okay? Again, the exam is not in order. So be very careful and read very carefully, okay? All right. So, number 26. Okay, so we're diving straight into chapter 7. Okay, your tracking method is perpetual. Okay, on June 1st, you made a purchase of 100 coffee mugs for $2.35 each, and freight is $100. You purchased this on account. Whoa. Record this transaction.
June 1st,
June
coffee
1st.
mugs, $335. Accounts payable, 300, credit $335. And then I have in the notes, 100 coffee mugs.
Good. Coffee mugs for how much again?
$335.
$335.
Should be 235, right? 100 times 235.
Okay. Why do you say that?
Well, you made a purchase of 100 coffee mugs for. Oh, never mind.
Yeah, the freight is in
Well,
there.
yeah, okay, with the freight, yeah.
Because everything
Okay.
goes into inventory.
Right. That's
Good.
okay.
Good.
Thank you.
Good. See, good. So yes, that's the difference. Okay, everything goes into inventory because we're dealing with perpetual inventory. Okay,
Right.
everything goes in there. There is no need to separate. There is no need to do anything. You just put everything into inventory. Good. Okay, good. So yeah, that's how you do it. And it's 335. Perfect. I'm not again on the journal. I'm sorry, on the actual exam. I'll give you I attach the midterm sheets that you can fill in. You don't necessarily need to have the description. It's just it helps. If it helps you, it helps you. But for this exam, I'm just gonna ask you this. I'm not gonna ask you anything about description. So it's just for your own benefit.
Okay.
Okay. Number 27. On June 7th, you received your coffee mugs and found two of them were cracked. All right. You request a refund from your vendor. Record this transaction.
Sales return allowances, accounts receivable.
Not sales returns and allowances. Did we make a sale? No.
No, we're
Payable.
returning though.
Yeah, it's accounts payable for $470. And the coffee mug for $470.
Yes.
$4.70.
Yes. Now $4 and how many cents?
70.
Yes. You're gonna take the $2.35. You don't include freight because that's not one that you cannot return freight for that.
No. So it's just straight out, the $2.35.
Exactly.
For the 2 cups.
Exactly, because shipping is a separate cost, correct? But we want to make sure that when we sell our product that we include that cost, because I'm not gonna out money for the shipping. So yes, but when you return something, yes, you have to return it for the price that you originally purchased it for. And that's it. You cannot return any shipping, okay? So good, yes, $2.70 is correct. So one thing I made a mistake here was I didn't enter the information, but it's good that you just assumed that this two questions were related.
Yeah,
Okay.
they were related.
Yeah. All right. Number 28. On June 8th, you sold 25 coffee mugs, $10 each for $10. It cost you $3.37 each. Okay. Assume no sales tax. All sales were made with cash.
Mugs, sales,
Not mugs.
Not
cash.
mugs, cash. Good. Okay. Cash
Sales.
and sales. Good.
Both for $250.
Two
$250.
$250 is correct. Oh wait, hold on. You sold. Yes, good. Okay.
And then it's going to be cost of goods sold, then mugs
Correct. Cost
for
of goods
$84.25.
Exactly.
and coffee mugs for $84.25. You guys said
Yeah.
Yes.
84.20. Oopsies. 84.25. Wow, it came out even.
Yeah.
Wait, 333. Really? 337 times 25 is even? Yes, it is. So, 84.25 is correct. Yay. So, yes, in this one, because we're assuming that all of these questions are related, okay, because we're dealing with chapter 7, that, yes, they're perpetual. And in periodic, we would never record the cost of goods sold because we would never keep track of what we sell. We only need to record the sales. So it's good that you recognize that this is a perpetual sale, that you need to include the cost of goods sold. Good. All right. 29. On June 10, okay, a customer returns 2 coffee mugs for a full refund. You said each mug was for $10. You sold each mug for $10 each, and it cost you $3.37 each. Record this transaction.
Sales returns and allowances in cash for $20.
Sales returns and allowances and cash for $20 is correct.
And then mugs and cost of goods sold for $6.74.
What did you put here? Mugs and then cost of goods sold?
Yes.
Perfect. Good. Coffee mugs here and cost of goods sold. So cost of goods sold is a reversible account. Cost of goods sold. Okay, so you can use this to either decrease it or increase it. Sales is finite. That's it. You can only sell it once. So in order sales and returns allowances is a account that we create. It's a contra account to reduce your sales. And how much was it for again? $8.674. Good. $6.74. That is correct. Good. All right. So that was chapter 7. So chapter 7 was to record your periodic purchases, which we did. It also had to deal with any returns for vendors. We also looked at sales and how to return sales for customers. Okay, good. Now, chapter 8 is where we actually look into calculating each item per cost. So this time we're dealing with perpetual inventory. Okay, so let's look at here. Your tracking and costing method is going to be perpetual LIFO. Okay, last in are the first out. So let's go ahead and solve each one. 6-1, what happened on June 1st?
June 1st, he purchased 100 toys costing $1 each. Freight costs $25. So your quantity is 100. Your price is $1. Your purchase expense is $100. Freight 25. $125 is your total cost, and your cost per item is 1.25.
Good. Okay. Simple. That we've done this before. Yes, we have. But this is also, easy peasy. Okay. June 10th. What happened on June 10? Let's see if I can scroll down.
You purchased 200 more toys at $1.25 for $2.50. Purchase expense, freight was $50. Total of $300, and your cost items $1.50.
All right. Let's making sure my numbers are correct here. Yes. Good. Good. All right. All right. So that's how you just enter in the information right there. All right. Next one, June 12th. What happened on June 12th?
June 12th, you sold 200 toys at $5 each.
Okay. All right. So how do you solve this one? How do we enter it into the table?
It's 200
Yeah.
at a cost of $1.50 because we're last in, first out, which
Perfect.
is going to be $300.
Perfect. Wait, how much did I sell? 200. Oh, okay, there you go. I eliminate my whole entire middle row here. Okay?
Yes.
Do you want me to do the calculations in here, or are you okay like this? Or
I'm
maybe
okay.
I can just cross it out. Okay? Good. All right. All right. What happened on the 15th of June?
You purchased 300 more toys at $1.50 each.
Okay.
For purchase price total $4.50, and freight was $75, and the total was $5.25. Cost per item is 1.75.
Good. Okay. All right. And then what happened on June 20th?
You sold 100 toys at no, you sold 250 toys at $5 each.
Yeah, I sold 250. Okay, good. 250 at how much?
5 each.
Okay. So what am I going to put here? Am I going to put 5 or am I going to put a different number?
Put the 175.
175.
Yes, you're going to do 175. Yes, because what method are we using? I mean, what costing method are we doing?
Perpetual.
Perpetual. Exactly. No. Okay. Yes. But what costing method are we using?
LIFO.
LIFO. So the last one that we sold is going to be the 175.
Yes.
Or the last thing that we purchased was the 175. So what is 175 multiplied to 250?
437.50.
437.50. Okay, now you can do whatever you want here. You can either subtract it here to get you a total of, what's that, 50 left?
Yes.
And then, what is this? Minus 437.50.
87.50.
And then you said 87.50 is
Yes.
remaining. Okay, so I'm going to go ahead and I guess I'm just going to cross this out because we don't have it anymore. So, okay,
Are you recording this also, by the way?
yes.
Okay.
Okay, so here we have a total of how much left in our inventory?
150?
100 from the very beginning, and we have 50 right here.
Yes.
So yes, if we read here, you are on June 30th, you're supposed to have a total of 150 items on hand. Okay, so let's go ahead and answer the question. So, I'm sorry, what is the total cost of your ending inventory on, on hand?
B.
B.
B is, yes, if you add your 125 along with your $87.50, you should get 212.50. That is correct. All right. And then the next question is, what is your total cost of goods sold?
C.
C, $747.50.
D as in dog.
D as in dog. Okay. Uh, 737.50. Yes, because we sold here. If we add this together, right? We sold a total of 450, and you got 300 plus 437 gives you 737.50. Yes, so C, easy peasy, done, boom. This is probably the easiest one just because I gave you really nice numbers. So yes, and just understanding the concept. Good. All right. Now we're gonna do another one. Except this time, since I figured if you can do FIFO, if you could do LIFO this way, you could just easily do FIFO the other way. The only harder one that I want to test you on is going to be moving average. Okay, so this time you're getting the same set of information, but this time your tracking method and costing method is going to be perpetual moving average. So you think it's going to be the same? It's definitely not going to be the same. Okay, so let's go ahead and do our calculations now. So on June 1st, what happened? Oopsies, sorry. June 1st, what happened? Oopsies.
Purchased 100
Uh-huh.
for $1. Purchase expenses $100. Freight 25. Total 125 with the cost per item is $1.25.
Perfect. And $1.25. So right now, you only have one item or one batch in your items. And right now, it's only worth 125. All right. So what happens now that we have, what happened on June 10th? Oopsies. June
You
10th.
purchased 200 toys,
You purchased,
$1.25 each,
okay.
for a purchase price of $250,
Okay.
$50 freight,
Okay.
total of $300, and your cost per item is $1.50.
No.
No. Why?
It's moving average, so you want to add both quantities to make 300 and divide it by the total amount, which it rounds to 1.4167, but we're going to leave the whole total in your calculator.
Good. So what was it? 1.47 you said?
4167?
4167. Good. So again, this is moving average. You don't need to calculate this extra step here because either way, you're going to recalculate because we're not looking at a cost per item. We're looking at an average cost per item. So that means you're going to take the total quantity and the total cost, and you're going to divide that. And then you're going to get 1.4167.
Okay.
Okay? So,
Mhm.
make sure. So, every time you calculate this, that if you have Excel, you should be fine to leave it in your cell. But when you're doing this on your calculator, make sure you just either recalculate the 425 divided by 300 and then multiply it, or whatever you want to do. Okay? So good. So we recognize this much so far.
Yeah.
Okay, so what happened on the 12th of June?
Sold 200 toys at $5 each.
Okay, so we're going to sell 200 items, okay? How much are we actually selling it for?
Selling it for the
1.4167.
Okay. Or make sure if you're not gonna round till the end, make sure you do 425 and you divide that by 300. Okay, and then you're gonna multiply it by the 200. And what do you get?
283.33.
283.33 is the answer. Okay, is the answer to that one. I'm not quite sure if I rounded this. I might have rounded it for this one, but go ahead, just keep going.
So
Okay, so now
issue 33.
you did not have an issue.
I said I think you did end up rounding because I had an issue with 33, but we'll come to that once we get there.
Okay, perfect. I think so too. I think I rounded it to 142, just so then it's it's the exam, not
Right. Okay.
Okay, so this is going to be 100, and then this is going to subtract how much again? 283.33. So I get a remainder of what?
141.67.
Yes, 141.67. Okay, what else happened on the 15th?
You purchased 300 toys.
So
at
we
$1.50 each. But 75.
Okay, so I purchased 300 for 150, which gave me 450 plus 75 gives me 525. And then now what I need to do? You need to add these up together, right?
You just need to add them together.
Okay. All right.
$666.67.
Oh gosh, these stupid numbers again. Oh, okay. Anyways, I said maybe I need to change it for this stupid for this whole entire thing again. Okay. All right. So we get 666.677. Okay, good. All right. And then how much is the average cost per item for this one?
1.6667.
All right, 1.6667. Okay. All right. And then lastly, what happened on June 20th?
Sold 250 toys.
We sold 250 toys at how much?
And the cost will be at 1.66667.
Oopsie, that's enough. You guys get the point.
Oh yeah, that one.
Okay, so
416.67.
oh my gosh, wait, hold on. What did you say?
The total amount is 416.67.
Oh, that's a nice number. And then we're gonna subtract this by 250. giving you 150 left. And we're going to subtract 4, 16, 6, 7 to give you a good remainder of
250.
250. Oh, nice. It came out even though.
That's a good thing.
Which, in this case, if my total is 250 and I only have 150 units left, it's going to be still for 16666. Okay, there you go. All right. So I think I did round this answer for some reason. I think because I was just thinking about you didn't need to have a calculator. But let's go ahead and find the closest answer. So number 33. Okay. So what is the total cost of your ending inventory?
Okay, so B.
150 toys.
250 is yes. Boom. Okay. And then what is your total cost of your cost of goods sold?
It would be 700, but you round it, so it's going to be D.
701. Yeah, 701.50. Yes, that's the closest we can get. Let me see. So this is yes. It would be it's supposed to be 700. You're right. Wait, no. 700. Yes, 700, but 701.50 is correct. It's the closest number you can get. So yes. This is due to rounding, so this is because I rounded early. But yes. So I mean, like I said, if you were to just find the closest one as far as that should be the right answer. So yes, 701.50 would be the closest. So okay, all right. Okay. Now we're going to be diving into lower cost of markets. You guys, I only put one problem in here, so let's go ahead and solve for the table, and then we can go ahead and solve for which one is lower, cost or market. Okay, so how do you find the ceiling price?
Selling minus cost of disposal.
So we got 10.50 minus the cost of disposal, which is $1.33. So what do we get here?
917.
917. Okay. Next is going to be the floor. How do you solve for the floor?
Selling minus
Ceiling.
profit.
Mm-hmm. Which gives you
562.
yes, 562 is correct. And then how do you determine what the market value is? What are the three numbers that you're going to be looking at?
You compare your ceiling, floor, and replacement costs.
Okay, so we got 917, we got 562, and we got 402. Or I mean 405. What's in the middle?
For 562.
562.
Yep, 562. So now we compare. Well, what's lower, the market or the original cost?
Original.
Original cost is lower. Yes, because it's 475. And that is the answer. C. Yay. Boom. Okay. So that was an easy peasy one. Again, it's just understanding where everything goes, and that should be easy. Okay, so that was chapter. Wait, hold on. Why did I put lower cost of market all the way down here? That should be chapter 5 or chapter 6. My bad. It's cool. Like I said, you guys got the answer anyway, so it's good. Now, chapter 9 is going to be dealing with your petty cash. So let's look at this example here. Okay, the following information. Use the following information to answer the next question. So, on January 1st, you establish a petty cash fund for $500. Okay. By January 31st, you counted all of your receipts, and here are the receipts right here. Okay. Now the question is, for what amount do you need to write a check for to replenish the petty cash fund?
For $60.54.
How much did you say?
$60.54.
Yes.
The cost of your receipts.
Exactly. This is, you add up all these things because this is all the receipts, right? Your receipts is all of this plus whatever remaining cash you have. And you need to reimburse it by putting more cash into the petty cash fund. So you're basically selling your receipts and converting into cash. And it should be for $50.54.
Yes.
Okay? Good. Easy peasy. That's all I need. That's all I want you to know in chapter 6. I mean, chapter 9. All right. So again, question number 36 asks, how do you establish a petty cash fund?
Debit, petty cash, and credit checking.
Okay. Good.
Is that right?
You debit all the expenses and credit.
This is to establish a petty cash fund, not to replenish. Okay, so David is actually correct on this one. To establish a petty cash fund, you need to debit your petty cash and you need to either credit your checking or credit, you need to write a check, the same thing, you're going to still credit your checking. Let's look at the other examples. Okay, debit checking and credit petty cash fund is wrong. Debit petty cash fund and credit all expenses. No, remember, you never establish a petty cash fund by crediting all your expenses. That's already wrong right there. Debit all expenses and credit petty cash fund. You never touch your petty cash fund unless you're establishing it, increasing it or decreasing it or closing it out. So David is correct. A is the correct answer. Okay. Again, this is all about reading. Make sure you understand that right here, this is to establish a petty cash fund.
Right.
Okay. Number 37. Number 37. How do you replenish a petty cash fund?
And that be A. Deduct all receipts in the lockbox and
I said B.
from the petty cash.
Okay, deduct. Okay. Okay, so David, what did you say?
B.
B. B is actually correct.
That's right, they did say deduct.
Yeah.
Debit, so be debiting, not deducting.
Yes. So deducting, yes, but another thing is, how do you replenish your petty cash? You need to write a check for the total amount of receipts. Correct? So again, no, you don't need to write a new check. Count all the petty cash fund and write a check for the same amount. No, that's not what you're supposed to do.
You said B, I said B.
Huh? Oh, sorry. I was just going through all the answers. Okay, so B is correct. You need to write a check for this amount. Can I ask what's going on? Someone's...
Yes, that windy noise again.
Right.
Yes. Okay. It was very good in the beginning.
It's okay now.
Yeah. Okay. So that was all it for chapter 9. Okay. So see, petty cash fund, I just need you to understand how to establish it, how to increase it, decrease it, close it out, and how to replenish it. That's all I'm going to ask you for the exam. Okay?
Okay.
Now, chapter 10, let me recollect what I remember teaching you. I believe chapter 10 is receivables, which is bad debt, time value of money, and bank reconciliation. All right. So let's go ahead and dive right into number 38. Under which method does the IRS... I'm so bad at reading today. Sorry. Oh my gosh. Under which method does the IRS use to write off bad debt? Okay, for tax purposes only.
C.
C is correct. The direct write-off method is correct. This question could be asked many ways. What if I said, which one does the IRS not use? Or I could say, which ones accountants use? Okay,
Allowance.
and it'd be the allowance method. Good. All right, number 30. Okay, a company estimates that $34,887 of its $500,000 accounts receivable is uncollectible. Okay, there is currently a debit balance of $5,000 in the allowance for doubtful accounts. Okay, the adjustment entry will be. So let's go ahead and do it. So we don't have a date. Just assume it's at the end of the one period, but we don't know what. So what do we do here? So
Bad debt expense for 39,887 and allowance for doubtful accounts for the 39,887.
bad,
Yes.
bad debt expense, and I'm just gonna put allow dot allowance. Oopsie, I forgot the 4. I'm just gonna go like that. Okay, allowance for doubtful accounts. And how much did you say it was for?
39,887.
39,887. So you recognize that you added the two numbers together. And that is
Yes.
correct. 39,887 is correct. Okay. And so then 39,887 is B.
Yes.
Okay, good. What about 40? 40 says, okay, a company estimates that 34,887 of its 500,000 total credit sales is uncollectible. There is currently a credit balance of $5,000 in the allowance for doubtful accounts. The adjustment will be
34,887.
yes. Okay, so bad debt expense allow for doubtful ACCT for 34,887 is correct. 34,887 because we recognize total credit sales. So 34,887. So A is your answer here. Good. All right, so another one goes, a company estimates that 34,887 of its 500,000 accounts receivable is uncollectible. There is currently a credit balance of $5,000 in the allowance for doubtful accounts. The adjustment entry will be
Allowance for bad debt expense and allowance.
yes. Okay, so I'm just going to copy this.
29,887 debit and 29,887 credit.
29,887 is correct. So good. So you recognize the word credit and you recognize accounts receivable. So yes, and because you recognize credit, it means to subtract. So therefore, 29,887 is correct. And then lastly, a company estimates that 34,887 account of its 500,000 total credit sales is uncollectible. There is currently a debit balance of $5,000 in the allowance for doubtful accounts. What is the adjustment entry?
We don't care because we see the keyword total credit sales and 34,887. Right?
Good. Yep.
And that was A.
Good. I want to drill this in your head, okay? So you guys remember that when you see that, it's going to be the other answer. I mean, it's going to be your estimate, okay? Because a lot after this, some of you guys might get it wrong again on the exam, okay? So make sure you recognize that. Okay, so here for question number, okay, whatever we're on. 43. Okay, so I gave you a series of here's a bank statement. Okay, here is your cash ledger as well as your check register as well as your deposits and receipts. Okay, and then here is your bank reconciliation. Okay, so what do you want to start on, bank or the cash side?
Bank.
You want to start on the bank side? Okay, so what do you do?
Just NS subcharge and service charge under the due. Or
Not
under
no.
the add.
No. What do you need to start off first with? And that is the wrong side.
The ending balance.
You need the ending balance. Okay, so where do we find the ending balance?
It's $10,080.
10,000. 10,084. No, that's not right. Where did you get this number from?
I said 88. On the bank statement, ending balance for 8/31 is $10,088.
Okay, good. So that means we're going to start on the bank side with 1088. Okay? What do we need to add when we're dealing with our bank?
Service charge and NSF check.
No, that's the wrong side.
Any missed deposits.
Any missed deposits. Remember, now we're dealing with the bank side. It's you gotta do. You gotta do. So let's go ahead and look at deposits on our deposit slips. Okay. So we have, yes, you do have it backwards. So here, let's count 1, 2, 3, 4, 5 deposits. And in my actual bank statement, I only have 1, 2, 3, and 4. So I'm missing, most likely it's going to be the last entry I've had. And it is, for 8:30, we deposited this much amount. So where do we put this? Okay.
Under subtract for deposits.
Not subtract.
So you're adding these.
You're adding deposits, yes. For how much? $438?
At 483.
Is it 483 or 438? Okay, 483.
483.
Okay. All right. We've already calculated our deposits. We have exactly 4, and we have 1 missing. So we're done with our deposits here. What are we going to subtract?
Outstanding checks.
Outstanding checks. So let's go look at our check register now. We wrote a total of 8. We got 1, 2, 3, 4, 5, 6, 7, and 8 checks. Okay? And I'm going to go ahead and scroll up here and see which ones I have actually went through. So what am I missing?
6 and 7.
6 and 7. So I'm going to go ahead and go down here and I'm going to validate those 6 and 7. So 314 and 54 is my answers.
368.
Okay. So hold on. So 106. Oh, sorry, 306. And number 307. Shoot, my brain. Is it
368.
Total is 368?
Yes.
Okay, hold on. Let me check the numbers again. So I know it's 54. I can't remember what the first one is. 314 and 314 and 54, which should give me a total of $368. Yes. So, what is my total here?
$1,038.
What happened? 1238?
1203.
1,038.
Should be 1203.
Okay. All right. Just because we stop here, that doesn't mean we're done. Because again, my answers could be a bunch of answers that I want you to think it's the answer. So we have to finish this out completely in order to verify that 12 of 3 is correct. Okay, so how do I solve for the cash side? Where do I need to start? I need to start with the ending balance. So how do I find my ending balance?
1153.
Yes, 1153 is correct. 1153. Okay. What do I need to add now? So I'm going to go to my bank statement.
Your NSF and your service charge, you add them together for 150.
You don't add them. You don't add that. What do you add first?
Interest and ACH.
Interest and ACH. NSF and your service charges are your fees. So if you're on the cash side, you're doing your ifs. So you don't add you add them down below, yes, together, but you subtract them from the total amount. So here we have ACH for 125 and we have interest for 75. So ACH and interest 125 and we got 75. So we got a total of how much are we going to add together? 200. Okay. And then now what do we subtract?
150.
We-
NSF charge and service charge.
Yes.
Add them together and get 150.
Hold on. So service charge was 100 and NSF was 50. So let me scroll down here. I'm just going to put SR charge. And this one is NSF. So this was for 100 and this one was for 50 to give us a grand total of 150. So let's calculate this. Is my adjustment It is 1203. 1203.
1203.
1203 is correct. Okay. So that means, okay, well, we could have stopped there, but, I'm just making sure that you guys follow through and complete, because, again, there are times where if they don't match, you have a discrepancy somewhere. Okay? So good. Good. It's 1203. Now, let's go ahead and number 44. I think let me see how many more questions we have left. Okay, let's answer these two last questions and then take a quick break and then we'll finish off the rest, okay? So number 44. Okay, so 44 is going to be you bought a bank bond worth $100,000. Its annual simple interest rate is going to be 15% and can be redeemable at any time. How much will the bond be worth in 10 years? Okay, so I have the table filled out for you already. So how do we solve for the following equations? Okay. First off, let's recognize, what is the question asking at hand? Is it asking for the interest that you're going to collect, or is it asking you what the future value will be?
Future value.
Good. Okay, how much will it be worth in 10 years? So, okay. Now, in order to solve for future value, you need what? You need to solve for the interest first. So, how do you solve for the interest?
Principal times rate times time.
Yes, principal times the rate times time. Okay,
It's 155,000.
155. Oops, too many fives there. 1, 2, 3.
Too many
100.
zeros.
155,000. So, what's the future value going to be like then?
355.
Interest minus principal.
300 or 200? Oh, wait. What am I? Is it 255?
355.
No, 355.
355.
It's principal plus the interest.
Okay, so 355. Okay, my B, I put up here that the bond was 100,000. So it's supposed to be 200,000. Okay. There you go. File save. And yes, the answer is now 355, which is going to be C. Okay, good. All right. Now, if you don't have Excel, that's fine. But I threw this in here just so you guys can practice it. Again, it's not going to be on the exam, but if you do have Excel or have solved this already, let's go ahead and just attempt this for practices. Okay, so a credit card company lets you have $5,000 at an interest rate of 25%. Okay, compounded every month. Okay, how much interest will be collected at the end of 2 years? Okay. So, can someone tell me what the formula is at least?
Okay, principal
Okay.
plus,
Mm,
I'm sorry, principal times rate.
no.
It's principal times in the parentheses 1 plus rate over number of components to the exponent of the component times time.
Exactly. Okay. And that's to solve for what?
Future value.
It's to solve future value. Is anybody able to, besides Jabrea, is anybody else able to use Excel to answer this question? No? Yes?
No.
No.
No? Okay. All right. All right. So, okay, Jabrea, go ahead and answer this question. So, what did you calculate here?
I don't have Excel either, but I'm gonna guess that it's D.
D?
Yeah, I can't do the exponent part.
Oh, okay. I thought you had Excel the whole entire time.
No.
Girl, you had me thinking. I'm just kidding. I was like, oh man. Okay, let me go ahead and do it here. Okay, here. Okay, so I'll go ahead and do it real quick, just so then we can show you again how to do this. So I don't want you to dismiss it because it is very, very important that you do know it for your future. So again, it is very useful, especially if you're either opening a credit card or anything really when you're dealing with any. Oh, whoa! I opened too many Excels. Okay, okay. Well, anyways, okay, so let's focus on this one. So my go bigger, man. Go bigger. Bigger. Okay, so wait, maybe a little more bigger. There you go. So we had our principal. We had our principal, right? Our principal was P. I'm just gonna do letters, okay? So principal was $5,000.
Okay.
We had R,
500.
which was 25%, was it?
I thought it was
500.
28 something.
Its principal is 500.
Yes. Well, you have
Oh, you
The
did say
table
500. I'm sorry, I thought you said
500.
5,000.
in the thing in the question is 5,000.
Yeah, you have 500 here.
Oh, jeez. Okay, so it should be it should be.
It's gonna be
Let's solve it for 5,000 first, and if it's wrong, then I'll use the 500. Because if you're borrowing a credit card, okay, let me see. I'm again typos. Okay, so 500 rate is 25. Your end is going to be 12, and your time is 10, right? And you're trying to solve 20.
29.
Yeah, it's different in the question and it's different in two different places.
Okay, all right, my bad. Okay, I'll fix that. Okay, so it's 28.9. Okay, okay, I'm gonna follow what's in the box. So 0.2289, did I say?
Mm-hmm.
12 and 10 years. Okay, so my future value is going to be equal 2
Your
years.
time should be 2.
So equal. Okay, hold on. This is too big for me. Okay, there you go. So my future value is going to be equal to your principal, okay, times 1 plus parentheses your rate divided by your number of times, okay,
Let's see, carrot.
caret, open parentheses, your n, and you're going to times that by your time. And you should get this number here. And then when you subtract the 500 to get your, I'm sorry, interest is going to be your future value minus your principal. So if I were to do this minus my 500, I should get $385. And is that one of the answers?
Yeah.
Three.
It's A.
It's A. Okay, so I was supposed to use my numbers here. Okay, so I need to fix that then. So it'd be A as your interest. Okay, so I'm gonna highlight this so I know to fix it. Okay. Whoa, is that like red? Okay, I'm just gonna go undo. Okay, there we go. I'm gonna fix it now so then I can go ahead and move on with my life. Okay, so you gotta for $500, and the interest rate is
8.9.
28.9%. what is going to be the value in 2 years? Well, I got that one right. 2 years. Okay. So there you go. Good. So file, oopsies. File, save, and I just gotta make that correction. Okay, good. All right, so, okay, so now it is exactly 2:36. Let's call a break. Let's do 20-minute break, so please be back by 2